All right, guys, welcome. Let's do a little bit of a breakdown of the trades we had today. I think there's a lot of learning that we can do within the trades we had today. So let's talk about the first trade. The first trade was a buy on gold. Now, before we go into the depths of this trade, I think it's very important to do some analysis. So let's go off of the 30-minute time frame. And let's zoom in here together and let's take a look. So before this thing happened, I think it's also important to understand where we were in terms of how price action was creating areas and so on and so forth. Now, initially, what we had no analysis here, right? So let me also bring up the 15-minute time frame. I think it's better, and let's go to viewing options and let's go to deal map here. Okay, so this is our 15-minute time frame. Now, looking at the 30-minute, initially what was going on is that we had a resistance that was forming. This was around before London Open. So this is the resistance we had right over here, right? We had resistance. We're consolidating and we're looking to see that, okay, where it can be a support. So if this is resistance and price is ranging, you have this candle. So if someone says that, okay, I'm going to look for a sell below this candle, let's measure the range onto the next support. Next support is like 23 pips away, right? So can we take a sell to this area? Absolutely not, because the range is not enough. We have this area right over here, right? Next, if we go up, if we move up from this point, how far can price go? Now, if we break up, we have these wicks here to the left hand side. And this is something also we talked about in the live stream as well, that we have a wick to the left hand side. So now someone can say, okay, well, if price can break above this area, well, there's a wick to the left hand side. How can you be so sure price will move into this area or not? Let's take a look on the 15-minute time frame. Now, looking at the 15-minute, let's remove all this and actually let's go to 15-minute over here. So this is what we had. Looking to the left hand side, we had this resistance right here around 23.31, and I'm going to tell you why 23.31 was more important than this resistance here. Now, looking at the 30-minute, first we have to identify, if we break above this area, how far can price go? We look to the left-hand side. We're like, okay, maybe we can come up towards 23.28. How much is this range? This is like a 19, 20 pip range. Okay, well, there's also a wick over here, and there's also a big wick right over here in the 30-minute time frame. So whenever you have wicks on the 30-minute time frame, 1 hour time frame, it's always a good idea to step down to a lower time frame, let's say the 15-minute, to see what market structure do we have here. Now, when we drop down to the 15-minute time frame, the market structure we see to the left-hand side is this, right? So we have resistance. Above this resistance, we have another resistance. And above this resistance, we have another resistance. And above this resistance, we have, you get the idea? Resistance up over here. You get the idea, right? There are wicks over here. Now we have wicks here. I'm not going to drop down to the 5-minute time frame because that's going to give me weak confirmations, right? So again, we have resistance, which is also present on the 30-minute. But when we look on the 30-minute, this resistance is basically a wick on the 30-minute. And then you have another wick on the 30-minute. But now, since we're looking at the 15-minute, we actually have a resistance, right? So this becomes a weak resistance because above this resistance, there's another resistance, literally 25, 26 pips away. And above this resistance, we have clean candles. So whenever you have a zone and you have clean candles after that zone, that becomes a stronger zone. So this becomes a stronger resistance area right here. So this is where there's a very high likelihood for price to move up to with volume. Now, looking at the 30-minute here again, right, there's a very high probability for price to continue pushing up. Even though you have rejections over here, the only thing that's going to move price up is going to be volume. Volume will break zones, volume will break wicks, volume will break areas of price action which are not broken when there is no volume. Now, we had candles move here, so all we were looking at is for volume to break above 23.26 so we can continue pushing up towards 23.31. And for sells, we were looking at price to, if we break below this area, this is like a 36. Yeah, sells were also like 37, 36 pips away. But we were basically waiting for candle to either break and close below 23.21 or break and close above 23.27, as we mentioned in the live stream. Now, what happened is we had this candle, and then we had candle that moved up, right? We broke and closed above 23.27. So now the idea was that, okay, either the next candle can wick down and move up, So what I did was I was like, okay, you know what? I'm going to take an impulse entry. Well, no, not an impulse entry. I'm going to do dynamic risk. Dynamic risk means you open up a smaller position expecting a retracement. And if the retracement happens, then you're going to add more positions. But when you do that, you also risk that price will just continue to move where it wants to go. And that's exactly what happened. Like, look, we had candle form. I opened up a 0.5 lot and expected a retracement. I was actually expecting a retracement to the 1/3 of the body of this candle, because if it would retrace to 50%, 50% would be within this range. And then, that wouldn't be a good idea, because if it would retrace 50%, there's a very high likelihood it's just going to continue back down in the range, right? So now the stop loss was kept within the range, which was 20 pip stop, almost like a 20 pip stop. And the reason why the stop was kept within the range and not below the candle, which was, pretty big stop loss. Not even on the 15-minute I kept the stop loss. This was actually taken live, because in 15-minute, this stop would have been, like a 30 pip stop. So it was kept around reasonable within the range over here, because the whole idea is that if we're going to continue to push up, candles should not come back down in the range. That was the whole idea. And that was the premise of this buy, which we took for price to move up. Now, there was a sell taken right over here. And I'm going to talk about that sell here as well. Now, since we have moved up, now this one concept I'm about to explain is very, very important. Since we moved up, right? So this is a clean candle and you have another clean candle. Okay? We can just agree to that fact. We have two clean candles that moved up. Now, two clean candles moved up. Do we still need to have this resistance at this point? That's the question. Because we can't continue this resistance right here, which goes all the way here to the right-hand side. That makes no sense at all, because this resistance is based off of past price action right over here. Does this make sense? It's based off of past price action. And if this resistance was so strong, this candle should have reacted to this resistance, but it didn't. It continued to move up. So now, what is this? This is one candle, two candle. Clean range has been created. Now it's an uptrend, clean range has been created. So now the question is that, okay, if we have clean range, if price will retrace, create support, then we can continue to push up. Or if we retrace, keyword is create support. And if it retraces, create support, and it breaks that support, maybe we can fill this range going down. Make sense? So now this resistance becomes, well, not becomes, now we look for a fresh area. We look for a variable zone, right? So what happens is this is the support now being created right here. Now, does this make sense? We have a new support created. What about this resistance? We forget about this resistance, right? This resistance is no more. Now we have clean candles that have been made just like this. So now if we extend it a little bit, does this make sense now? So we have a retracement. We have a candle that's closing bearish, which is good. So we're expecting price to create support and then continue to push up. Okay? Now keep watching. Here we go. We have a support form. We have a support form, but at the same time, now this is new resistance being created and a support. The reason why this is a resistance, now this is something very important I need you guys to understand. The reason why this is a resistance is because look at the candles. Look what the candles are saying. Look at this candle. This candle body is bearish and the next candle body is bullish, which is smaller than the previous one. So this is a resistance form. If this candle body was bigger, let's say like this, then this would mean, right? If it was like this, then this would mean that the next candle can break the high and continue to push up. But it's not. It's a smaller body. Re-watch the last 1 minute 3 times. Now, we have resistance and we have support form, right? The basic definition of a support is the formation of a bullish candle followed by a bearish candle. So we have a support form in an uptrend. Now, what will happen if we break support? What's the probability of happening if we break support? Boom. Down. This candle broke below the previous low, impulse entry, clean candles to the left hand side, huge 59, 60 pip range for price to move down. Incredible. Look at that. We went straight down and we filled this range. Does that make sense? Isn't that simple when you're reading candles? Now, this may not happen every day, but it does happen. And this pattern will repeat itself. The whole idea is that you're reading price action and you're looking at fresh zones. Now, let's keep plotting fresh zones. Now, here we are. We have a support form. Okay? We have a support form in this zone. Goes away. We see here, candle forming like a small body. Candle forming like a small body with no wick at the bottom. And now we're starting to consolidate here and there's nothing happening right now. Like right now, there's no volume. So we're basically consolidating. But you get the idea what we talked about previously, right? Right over here. Now look at these candles. These candles are printing side by side. So all we need is one candle to break and close above price 23.31, which all these candles couldn't do. And then there's a high probability for price to continue moving up. Makes sense? So it's very important to understand variable zones and how you should look at fresh areas to determine where price can move ahead. Hope this makes sense. I'm going to make some notes as well, read through the notes. And education is key. Look through your charts, look through your trades, and see how you could have done things better.